Welcome back to K24 This Morning. If you're just joining us, well, you've come at a very critical point because today we're talking about finances. And what are we focusing? We're focusing on responsible borrowing. Now, a lot of us find ourselves in situations, especially when you're in need of money, finances, whether it is for an emergency, for a medical situation, or just to expand your wings as far as your business is concerned. And by that situation, I mean that we find ourselves in debt, digging ourselves deeper and deeper every single time we need to borrow. So today joining me is two gentlemen who are going to help us discover or more or less navigate through this process of borrowing and why probably we need to change our trends. I do have Peter Gitao, MD, Peter's Plots. Karibu tena sana.
Thank you very much.
Then we also have Mr. James Muritu, from Financial Technology Services. Is it FinTech?
Yep.
Quite an interesting name.
Probably
let me start with you. Yes. What is your company all about?
Well, we are basically a real estate company, so we are helping people to buy land and build houses and develop their property portfolio.
Okay.
And we've been affected by all this borrowing, the changes in the borrowing trend that we are seeing in the country.
Right.
Yes.
Okay. Yes. Interesting. What about FinTech?
Well, I'm a fintech professional. I work for a company called Atlas Mara Digital Kenya Limited,
all right,
who are in the mobile lending space.
Yeah. Oh, mobile lending.
Yes.
All these apps we see, that ask us and send us SMSs all the time. Oh, you now qualify for 5,000. You qualify for 10,000.
Well, in that space, but ours is done differently.
Okay.
We really don't do much of the mass market. We work with big corporates. So
okay.
We are really not into the mass market space.
Yeah. So you approach big companies, the blue chips and so on and so forth.
Absolutely.
And then you give them money. How much money do you have?
No, not much really. Ours is really responsible lending.
All right.
To very niche and targeted clientele.
Okay.
Yeah.
All right. You mentioned something about helping people get into the property market and be able to buy. But we are getting to a point whereby we can see a lot of developments happening in terms of real estate, but the houses are empty.
Yes.
Is it a problem that we can attribute to the whole fact that we have loans?
Yes, we can attribute that to what is going on in the market at the moment. People are borrowing money, but now you have to remember, 10 years ago, when people were borrowing from banks,
right,
they would not go to the bank and line up to borrow 5,000 shillings, 10,000 shillings.
Very true.
They would go and borrow 3 million, 5 million, 10 million, 15 million, all the way, a lot of money. And they had huge projects that they were working on.
Yes.
What's happening today is that the banks are taking longer to approve loans.
Yes.
Of course, you have needs, you have daily needs, you have to eat, you have to pay your rent.
Yes.
Now, a lot of people have come into the market with all sorts of apps, lending you 1,000, 2,000, 3,000 shillings.
Even 500 bob.
Even 500 shillings.
Yes.
Now, what's happening? Suddenly, you realize that your little daily needs, like food and all the, you can meet that fairly quickly by just downloading an app. And borrowing the money.
Borrowing. Because you download it and immediately you qualify. Absolutely.
Yes. Now, what's the effect of that? The effect of that is people's vision, people's focus has been narrowed. Because you are dealing with little money. Your focus is now becoming smaller.
Okay.
You're no longer thinking you can go to the bank and negotiate a 10 million or 5 million or 3 million loan. You now want to just quickly get rid of a problem. Your child wants transport. You don't have 1,000 shillings.
Yeah. I want to buy 2-3 beers.
Yes. Give them. Then what follows? After 30 days, 15 days, or 45 days, calls are coming, SMSs are coming. You need to pay back the money. So if you multiply that by about 1 million or 2 million people in the country doing that, now you can imagine what's happening. People are focusing now on smaller amounts of money.
Yes.
And the focus on developing yourself is being reduced. The property you are talking about that is not being bought, it's not that people don't want that property. People want it. But their focus
has changed.
It has changed. You don't wake up one morning and decide I'm going to buy an apartment in Kileleshwa or at the river or Kiambu Road. You need to plan it.
Yes.
You need to look at how you're going to pay.
You project.
You project. You look at your income. You look at your needs. You see whether you'll be able to squeeze in that 75,000 or 175,000 shillings per month to pay the bank, okay?
Yes.
To get that apartment.
Right.
Now, another issue has come up. If your own bank that has been with you for 15 years,
yes,
They know you very well. But they are taking 7 months to do their due diligence. You keep going there. They tell you, not yet, not yet, not yet. What are you going to do?
I fall back on the, smaller borrowing apps.
Exactly. And that is the problem we are facing right now.
Okay.
So the whole thing needs to be looked at so that things need to be moved around a bit.
Okay.
Yes.
James,
Yes.
I think you have touched on more or less directly on what you're involved in.
Yeah.
Because I think also being in the tech business, you develop these apps and you sell them or you list them or whatever it is that you do. So was that what was envisioned when they were being created? Because now what he's saying is that the vision has been taken away.
Okay, so I think let's take a step back. Kenya has gone through a tremendous revolution on the digital infrastructure. Look at what has happened in the last 7 years. From moving our TV stations from analog to digital, transportation, you have Uber now, you have Bolt, you have all these kind of services.
Yes, even pikipikis nowadays you can order.
Even pikipikis. So what's happening with the digital loans, it's part of that revolution that we're experiencing in Kenya. And Kenya is unique in the sense that we are higher adopters of technology compared to many other countries in Africa and the rest of the world. So the digital loans have come to solve a problem that nobody else was addressing.
Which problem is this?
The problem is access to credit.
Okay.
But now access to credit, we can divide it into two. There is a short-term access to credit. There is a money we need in the short term, whether it's medical, whether it's to buy working capital, whether it's household needs, whether it's very small expenses.
Yes.
Let's be real. That's short-term needs that need to be addressed on a daily basis.
Yes.
Then there's a long-term needs. You need 2 million, you need 3 million, you need 4 million. What Peter is talking about.
Right.
A digital loan will not address the long-term need. So the gap that the digital loans have addressed is access to that short-term credit that you need in the next 5 minutes or 10 minutes. There is no paperwork being filled. There is no collateral being provided.
Okay.
So the digital loans have filled a void that nobody was addressing.
Okay.
But unfortunately, with any good thing comes a bad side to it. It's a good solution, it's a good technology, but unfortunately we have a lot of people who have misused this.
They are abusing it.
They are abusing it. That's a reality of it. But looking on the positive side, I think the digital loans have evolved with the revolution that is happening in this country.
Right.
It's a good thing. And
would you say that the merits outweigh the demerits? Would you say they are at par, or would you say that the demerits are more than the merits?
Well, for me, I think the merits are more.
Okay.
The merits are more. Unfortunately, the noise in the public and the noise tends to outweigh the silence. Okay. Unfortunately, but I think the merits are more.
Because we have people complaining. I mean, I know friends, colleagues, relatives who have borrowed that 10,000 from a mobile app.
Yes.
Na akasema can't pay, won't pay. They have discarded the SIM card, and now they have acquired a different SIM card from a different network.
Yes.
And they are looking forward to taking another loan.
Taking another one. So let me say this: there are three kinds of borrowers in this country when it comes to the digital loans. You have the repairs. Let me call them repairs. Repairs are good people. They understand the effect of taking a loan and repaying it.
Right.
They understand the terms and conditions. They know the consequences of borrowing well or borrowing badly.
Okay.
So let me call them repairs. And what you'll find is that the repairs category, you'll find they have more than 10 loans or even 20 loans that they've taken over the last couple of years.
All right.
Then you have the defaulters. So defaulters are people who don't understand anything about the borrowing. They think it's just access to free money, but they don't understand that there are consequences of you not repaying that loan.
Okay.
They have no idea about what is referred to as a CRB. They don't know that when you don't pay that loan,
you're listed.
You're going to be listed, and it's going to have a negative effect on your borrowing in future. Then you have the third category that I can refer to as the jugglers. So what the jugglers will do is they have multiple loans across the digital space and also the traditional space. But they will give priority to the traditional loans. So maybe it's a bank loan, they will give priority to it, and they will still pay the digital loan. So this is somebody juggling every month. Sort out my 2 digital loans, sort out my traditional loan, and maybe sort out a chama that I belong to that requires to be paid 2,000 every month.
Yeah.
So it depends on where where one is following. But if you concentrate on the repairs, I think there are a lot of good people out there that are benefiting from the from the digital loans.
Peter, let me ask you the same question. Are the demerits more, less? Are we at par?
Well, I think as James has said, definitely they are doing the merits are more. They're doing a good job, of course, helping people get access to quick money, quick small amounts of money.
Right.
But the thing is this: at the end of the day, you cannot let citizens be loose on borrowing whenever, wherever,
however
they feel like. However they feel like. We are a country. We have to. These are our citizens, are our people. We have to come up with some sort of guidelines. I'm not talking about banning apps or restricting them.
Yes.
But you've got to remember, people as young as 18 are accessing these loans. And you find somebody has got about 3, 4, 5 loans that they've borrowed. You've got to remember, you've got a duty of care, a duty to guide the citizens. Now, if you look at what happened with the betting companies a while back, the government, took action and decided, all right, there are all sorts of issues with this betting. There's the issue of tax, there's the issue of young people spending too much time on them and all that, and some action was taken. Now, when it comes to borrowing from the apps, I'm not saying that they need to be banned, or I'm not saying that they need to be heavily controlled. What I'm saying is, you got to understand that it's a new thing in the country, and it is taken over everyone, like bushfire. The government has got to come up with a way. It's not necessarily banning the apps, but it's got to be some sort of guideline. Okay. Because at the moment what's happening is, as I said, it's a question of lowering the focus. 10 years ago, the talk was, I'm looking for a facility of 1.5, 2 million, 3 million, 4 million. Kuna kashamba pale.
Kitengela.
Nataka kuanza kabiashara. Namna hii, okay? I'm buying a car. That was the focus. And you could see that people would commit themselves long term.
Yes.
So you're borrowing and paying 36 months, 48 months to repay. What would happen is that people would settle down. When you got a commitment, when you commit yourself for 48 months, you settle down.
Yes.
You settle down for the next 4 years because you got a focus. Yes. I got this plot, I have to pay for it in 48 months. So what am I going to do? Calm down, focus on your work, take less risks in life, and get your plot.
Story party after party.
Party after party? No. What's happening now? Now I can walk in, right now I can walk into a social area without money in my pocket.
Yes.
Without money on my phone.
Yes.
Sit down, start going through those apps. And one will give me 2,000.
Yes.
That's enough to have drinks for the next 3 hours or 2 hours. Now, that's okay. But the problem is, you are focused in life. Do we want citizens who are dealing with 2,000, 3,000, repaying 2,000, borrowing 2,000, repaying 4,000, borrowing? I don't even very few apps will even give you 4,000. Yeah. They give very little money. Or do we want citizens who will calm down, focus on, I'm setting up a business, I've borrowed 1.5 million shillings from the banks, or from the circles, or from other people, and I need to focus on this job, wake up early in the morning, focus, because this business has to work.
So basically what you're saying is that is the fact that these mobile lending apps have made us more or less irresponsible.
Yes.
Okay. Yes. Let me rope in the audience in this particular conversation. And a discussion I was having with the entire team yesterday brought us to this particular point. And here's the question of the day. Are loans a form of slavery? Because in my opinion, that's exactly where we are. Are loans a form of slavery? Let us know through our various social media handles. You can call us on our phone lines. And of course, WhatsApp. Our number is up and running. Kindly let us know your thoughts on this. Are loans a form of slavery? Now, to get honest,
yes.
Like what you've said, we are now walking into bars, clubs or whatever with zero money, and in 5 hours we've drunk 10,000 from different mobile apps, and that money is not being invested. Yes. So probably, James, do you think that there's as much as you said, there are good things and there are bad things about it, but this one is seriously bad. Yeah.
Well, I think let me add something to what Peter said. There are two sides to this. There is a regulatory side to it,
right,
and also there is a user behavior side to it. The two go hand in hand. Look at betting. You can do as much regulation as you want, but people will continue betting, irrespective of how much you regulate that industry.
No matter how much tax
No matter how much you do, they will still continue doing it. It's the same case with digital loans. Of course, some form of guideline, some form of regulation is good, because that gets rid of the predatory lending practices.
Right.
But I think for me, the more focus lands on the user behavior. It really boils down to us. Because now, when you are addicted to digital loans, your thinking also starts being short-term in nature.
Right.
It's time you think about long-term thinking. You want to say, I'm getting this money for this purpose. It's something that is going to appreciate. It's something that 12 months later, I will see the results to it.
Okay.
But if you are using digital loans to settle, they are called immediate self-gratification needs that will not appreciate or grow, of course, it's not going to add value to you. So, to me, it really boils down to the user behavior.
Because there's something he mentioned. Now you can own a SIM card as long as you're 18 years of age.
Yes.
And if that SIM card is registered and it has your ID details and everything, you can download a mobile app for any bank or for any institution.
Correct.
And that gives you the authority to borrow that money. Now, the last time I checked, 18-year-olds are not employed.
Yes.
They're not. Yeah,
But this person, this 18-year-old who just wants to go and buy that packet of cigarettes, that bottle of whiskey and so on and so forth, will download that app, will borrow that 1,200 shillings, 1,500 shillings, and tomorrow they are unable to pay that money. Now, at 18 years of age, already umeshaanza kuingia kwa madeni.
Agree.
Yeah. And you might be listed.
The chances of that 18-year-old qualifying for a loan right now is very hard. 2 years ago, the market was very green.
Okay.
The loans were just evolving. And with time, the technology has advanced. So the KYC rules have become more stringent. So as much as we are saying that anybody can have access to that loan, it's becoming tougher. It's becoming stringent. So let me say that most responsible digital lenders have gotten into a phase of getting more strict with regard to KYC. KYC being know your customer.
Okay.
2-3 years ago, let me say that it was an open field. It's any Tom, Dick and Harry going in there, doing whatever they can.
Download, wait, shadow.
Yeah, but I think the maturity of the know your customer guidelines and standards, it's maturing. It's coming, it's becoming more strict.
Okay.
Because the other problem that was there was also the issue of fraud. There were a lot of people who are just out to defraud that sector.
The public, yes.
So not even the public, the lenders themselves. So you will wake up every morning and see how many loans are up today, how many are giving money. You don't have any job, and all you are doing is borrowing with this phone, borrowing with this phone, borrowing with this phone. So I think it's been a learning process that is maturing.
Okay.
And what will happen is that in due course, even in the next 1 or 2 years, we will not have as many digital loan providers, in my view, as we have today.
Okay.
All right? Because it's maturing. People are learning. People are seeing what's going on. And as people are seeing the consequences of being CRB listed, they will want to understand more. So next time before you take a loan, you want to know what the terms and conditions are. You want to know what the effect of me getting late to not paying this loan. Because again, in the past, nobody was caring.
Because again, we've heard of situations whereby people lose their IDs every single time. I've lost my ID before. And someone, takes that ID and goes and registered for a line, from whichever network. I have a good credit rating. Mimi sina shida yote. Siko listed kwa CRB.
Yes.
Then you might be an exception. I envy you.
I'm responsible. But the point is, they take my ID. And borrow, money from all these apps, and then they, like you said, they defraud the app, and then I end up getting into trouble. Do you think that probably the app lenders, the digital lenders need also to do a lot of things on their side to just make sure things work well? And before you answer that one, we have a Gideon from Narok. Gideon, good morning. Gideon, hello.
Good morning, sir.
How are you doing, sir?
Fine, thank you. Na leo hiyo tai yako ni mzuri. Who dresses you?
There's a lady called Seth. I will introduce you.
Yeah, thank you. Now, I want to take on the man on your bench.
Please do.
Now, James, there is one question that I want to ask you, James. Now, there is, men and people borrow with an expense already on the table. Yes, this is what I'm going to borrow for.
Yes.
Again, I can tell you for the truth that yes, kindly these days, even people are borrowing anyhowly. And even, that's why I'm even calling James Mururi. Is it James Mururi? Yes. It is the platform that you guys are bringing on that are actually putting our people on debt. So you should even, the government should come up with a management of those apps.
Okay.
So that at least they could not put our people on a lot of debt, unnecessary debt. Second thing.
Yes.
You know, actually, if I want to go to the bank right away.
Yes.
I must have put 1, 2, 3 things that I want to do. Now, the Kenyans have lacked that knowledge of saying, yes, if I need to go to the bank and borrow up a loan,
yes,
I must have put up a certain thing that I want to do.
Okay.
That is what the people, the Kenyan people have lacked.
All right. Thank you very much.
Maybe the last thing, if you can allow.
Okay.
People currently, if I can tell you the truth, definitely you must be having a vision if you want to have money, if you want to go to borrow in the bank.
Sure.
You must have put laid up a strategy that yes, if I borrow this cash, I must be having something, I must be having a business that will actually produce 1, 2, 3 things to repay that loan.
Very true.
Thank you very much, gentlemen.
Thank you very much, Gideon from Narok. James, you have been blamed for our problems. Because you say that you are the guys who came up with this technology, and you're the guys who are perfecting it every single day. So, again, he actually brings up the point I was about to, put on you, the fact that you need to be more responsible in terms of the how this app has been presented to us, and some of the security protocols that you need to input in it. Absolutely.
And if you look at the more mature apps, I will not make any mentions in this forum.
Yes.
But what you will find is that there have been a lot of advancement in terms of the onboarding process.
Okay.
Again, and you can check it for yourself. It's not that easy right now, just to get a loan, especially as a new borrower. There are more stringent measures.
Because of the KYC.
Because of the KYC.
Okay.
But also let me say that the regulatory environment, it's not a one-off activity. It's a guided activity. And what you'll find is that the government will be taking progressive steps. So recently there was a Data Protection and Privacy Policy Act that was passed. And what that is doing is pushing people to protect the data that they collect from whether it's borrowers or anybody else.
Yes.
So, and more regulation will be emerging as time goes by. And with that puts more pressure on the digital loan lenders to ensure that their systems are more mature, they are more explicit in terms of what they are doing with their data, they are more explicit on their terms and conditions, and it's not just easy again to be over pervasive in terms of what you are doing with the people's data. So let me say that yes, the problem was there, but also let me say this. When this space began, it all began with the independent technology companies that were doing that. But as of today, 80% of the loans coming from the digital space is actually from the incumbents. All right? It's actually from the incumbents. If you look at the statistics, the digital loans coming from the banks are more. They're giving me more money than the independent ones.
Okay.
So let me say that for the banks to be doing that with their own apps, as they are doing right now, it shows that it's a problem they are solving. It shows that there is a future in it. All we need is to regulate ourselves as individuals, even before we wait for anybody else to regulate us.
Yes.
It really boils down to us.
Okay.
Yeah.
Last question before we take a break, which maybe in a minute you can let us know. Is it hurting the economy? And I think we have a call on the line. John Nyongesa, good morning. Nyongesa habari.
Mzuri.
What is your question or comment?
My comment is I just share the same sentiment. 2 days ago I was sent an SMS from IPESA.
Okay.
That that actually I guaranteed somebody to get a loan. An app loan.
Okay.
Yes. And when I went to Safaricom to confirm this number that they were saying I guaranteed.
Yes.
Is actually a number registered under my name.
All right.
So I found out that I have 4 numbers and I only know 2 numbers.
Okay.
Yes. So it's unfortunate that people are using our IDs when you register somewhere at the gate and getting new numbers using our names. Then they get the money. Then after that, it now becomes difficult for us to pay because you are not aware. You are just told you're going to be listed on CRB. So how are we going to be helped?
Did you report to the police?
Actually, I went to Safaricom and I even blocked the number. But I want to report to the police and also know where that money was withdrawn.
Okay.
But it was registered under my name. But I don't know the number.
Sawa. Pole sana Nyongesa.
So I tend to think that there's a game being played between these apps and frauders.
All right. Sawa,
yes.
sawa. Thank you very much.
Thank you.
All right. Maybe we should take a break as we think about that answer. And maybe the solutions again that, companies such as yourselves are providing for, Kenyans. Waache kuumia. Jamaa amekuwa listed kwa CRB na maybe hata hajaichukua loan. All right. We'll take a short break. We'll be right back.